It's the opening bell on Wall Street. Jersey Mike's is ringing the opening bell today. The subchain is celebrating its IPO.
Oh, I'm such a big Jersey Mike's
I live in New York
fan.
City. There's subways and
Come over to Jersey.
Also,
There's
it's
one
like
right
private
down
equity
the street.
now, isn't it? Is it become private equity now?
Yeah, but it's
I mean,
still
they
really
kind of
good.
ruin everything. Let's get a live look at the opening numbers on Wall Street. The Dow is relatively flat, up about 300 points. CBS News business analyst Jill Schlesinger joins us.
Jersey Mike's. I was like, what is this? I saw it at an airport once. I'm like, I never
me too.
heard of
You
it.
see it in the airport. You
And
see
that
it
was
at
it.
Union Station in D.C.
Awesome, guys.
Okay.
And I'm not being paid to say this. I'm a big Jersey
we'll
Mike's
take your
She
fan.
money
pulls out a
if you'd like
Jersey
to.
Mike's hero.
Right.
So delicious. Let's talk about we've been discussing the latest numbers, the GDP report that came out this morning. What are you seeing?
So obviously growth slowed down a little bit in the second quarter from the first. I don't actually, looking under the hood, it doesn't really seem to be that big a mystery why government stopped spending. And I think that, when you look at one thing that's interesting, I noticed that consumption is still growing. Like people are still buying stuff, and that's just not companies that are spending on AI and build out there, but it's now broadening out, and people are spending, consumers are spending. So maybe Warsh was right yesterday when the Fed chair, maybe he was right when he said, look, the economy's doing okay. I think it is also, I don't get too unnerved by quarter-to-quarter changes. A lot of it also has to do with net import-export numbers, which doesn't really tell the story of on the ground. So on the ground, we're still expanding, and it seems to be broadening out a tiny bit, according to these numbers. And people are still spending. We had personal income and spending come out, and inflation seems to be cooling at the core level a little bit, with one exception, which does kind of bug me, which is we look at inflation at goods levels, like with the tariff stuff, right? And then the services. And the services inflation remains kind of high, up 3.7% from a year ago. So going back to the Fed, I mean, they've got a problem because inflation remains above what they want it to be. And we had 3 members voting to increase. And so we're going to watch what they do next. I mean, now there is some sense that maybe they will be forced to raise interest rates coming in towards the end of the year. We'll see. I don't know. I'm not convinced yet.
Interesting. You made the point about inflation. That is also a backward-looking number, right? Because
Sure.
that was June, and we know what has happened since June. We got back into the war with full force.
Mm-hmm.
Energy prices are rising. We were obviously talking a lot about the Fed yesterday and the fact that they decided to hold interest rates steady. I just want to play a little bit of a clip of our dear friend, Kevin Warsh, when he was explaining why.
The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. We understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver.
So, I mean, look, everyone in that press conference, they were going at him. It was kind of a vibe of what are you waiting for in terms of hiking rates? You mentioned this possibility of a hike by the end of the year. There were 3 people that dissented that wanted to hike rates. Mm-hmm. But I've heard you say before, they don't want to wait too long. They don't want to jump the gun. Why?
Well, I mean, if they wait too long, then you have inflation taking hold, and it's not just the inflation rate rising a little bit. We're not going back to 9% from 2022, so no one get freaked out. But there is a sense that this gets entrenched in what our expectations are. And when things get entrenched, consumers might change their behavior. We'll see. Hasn't happened yet. I think that the bond market, which he was pressed about a lot, and you're going to read headlines and, oh, my God, long-term bonds, the amount of interest that you receive from the federal government when you lend the government money for 10 years or 30 years, that those rates have jumped to, almost 2-decade highs. And what is that telling you? That is telling you that the investment community believes that the Fed is going to be forced to hike because inflation is staying too hot. And so whether they do it or not, it won't change your mortgage interest rates. It won't change your car loans. And so I think people just have to be prepared for higher interest rates, whether it happens at the short end or not. And I think Warsh is going to be forced. And I think they will have to raise probably by the end of the year, unless something changes dramatically.
Yeah, I agree with you.
All right. Really interesting. Jill, thank you very much. Appreciate it as always.